If you're asking me from a reference as a trader, I'd be neutral. This market flat. Um, there's just too many unknowns of what's going to happen Tuesday. The first part is who's going to be the president. Second part is who's going to control the Senate and the House. Third part is, will we even know on Tuesday whether or not we have Trump for another 4 years or Biden wins the election? So there's just so much uncertainty out there that you would anticipate that people would move into gold. But I think, when the market is this uncertain, again, as I mentioned a few times over the past few weeks, the first sort of gut reaction is to liquidate assets, especially liquid assets, and to park some of your money into cash, just sort of as a hedge in case everything goes wrong on Tuesday. If your investors in precious metals should not be liquidating their positions whatsoever. I mean, if you have a core position in metals, I think you're going to do extremely well with that position through 2021. I think the major cycle in the gold bull and silver market is still in front of us. If you have not allocated assets into precious metals and you believe that there's a percentage that you're comfortable with, and again, let's pick sort of the old standard 10% number. If you don't have an allocation into metals in part of your portfolio, I probably wouldn't throw all 10% in at this level until I had some clarity after the election. But I'd certainly have some exposure and, probably do it in thirds and maybe put 30, 33, 35% of your intended position into the metals market ahead of the election. And then if something goes wrong and the stock market, again, takes a big hit and people move to cash and the metals go down accordingly, you'll have some powder to average down with the anticipation that no matter who wins this election in 2021, there is going to be a significant amount of stimulus that has to be added to this market to keep the economy going. And I think that'll be very bullish the metals in 2021. I'm not sure it's so much spooking the investors. I mean, obviously, COVID is an issue. I mean, there's a surge throughout the U.S. and globally in COVID, and people are scared. So, the fear factor obviously creates some rationale to move into cash. But investors, depending on which area of the stock market they've been involved in, if they've been involved in the tech side, they have phenomenal gains. If you look at Amazon, Apple, Microsoft, phenomenal gains since the beginning of the year. I mean, taking some money off the table in that sector prior to the election, makes total sense. Doesn't mean the market's in a bear market. It just means, you're taking money off the table. You're also worried potentially that Biden might win. And if Biden does win, does he follow through that he's going to raise capital gains tax? And is he going to raise tax for people making over $400,000? If that's the context, you might want to take your profits in 2020, take advantage of this year's tax rate, and then re-enter the market, after you get a pullback if Biden should win on Tuesday. So there's a lot of jockeying going back and forth, and you can't make too much of it. There's a lot of noise and people get nervous, so you're going to see this volatility. Well, the Fed is going to be there again if necessary. Powell's made it very clear, look, we're doing everything we can do and we'll do more if we have to. But it's time to put your big boy pants on, Congress, and step up and add some more stimulus to this economy if needed. And unfortunately, because of obviously the election, the political issues between the Democrats and the Republicans, they weren't able to come up with a package prior to the election. But it's in nobody's interest, either party's interest, not to create some type of stimulus package for their electorate. And it's just a matter of when, not if. You had the rally from sort of where the market is right now back up to highs about 4 weeks ago. And there's a lot of profits in this market. And the big players, not the sort of the small investors that have either their investments through their IRAs, but the bigger players. They move in and out of the market, and when they get nervous, they sell. When this market troughs, and that's just a matter of how much more it could go down again, and that'll all depend on the results. It's going to be in my opinion, a screaming buy, and you're going to see this big money come right back in again. Well, let's assume Trump gets elected, but he loses the Senate and the House. I mean, now you've got a lame duck president for 4 years. Whose bill is this going to be? The stimulus bill? It'll be the Democrats. It'll be an extreme bill, probably much higher than the 1.9 billion that they're having trouble agreeing to right now. Will Trump veto it? It becomes that kind of an issue and an unknown. And as long as you give anybody that's the big players with the money, you give them any kind of feeling that they've got some certainty or a good sense of what's going to happen over the next 3 or 6 months, they'll play. Right now, they're unsure. And when you're unsure, you basically hedge your positions. And I think that's why you're seeing some of the valuation coming off the equity market and the metals markets. Believe it or not, I agree with Main Street. Main Street's right in the middle. I mean, they're uncertain. I had someone ask me this morning, where do you see gold price next week? And I said, well, if it's not up, it'll be down. I mean, there's a lot that's going to happen between now and Tuesday. And my feeling is I'd rather be neutral. Okay, if you put me in a corner and say, which way is the price going to be next Friday? Where is it going to be next Friday? And I had to take a guess. I would say higher than it is right now. But if I was a trader, I'd be totally neutral. Main Street, I'm surprised that Main Street's at 50 and the pros are at 70 bullish. I would have thought that number would have been reversed. It's possible. Again, you can't make too much out of a one-day event. So, I mean, one day doesn't make a trend. It's possible that gold decouples from the equity market after the election. But again, had this not been a Friday, after yesterday's drop, given the fact that the Dow was down some 400 points about an hour ago, I don't think you would have got this rally in the metals. It's a Friday, so Europe shuts down. They don't want to go into the weekend short. They're going to cover any short positions they put on yesterday. I mean, silver dropped $1.40 yesterday. Gold dropped $40 odd. A lot of traders had money on the table. These guys aren't going to sit there and take a short position into the weekend with too much can happen. So they're going to buy their positions back, take their profits, and go home and be able to sleep at night. So they bought, creates an updraft in the market. I don't think you can say that this move today creates a trend where gold or the metals have decoupled from the equity market yet. That may turn out to be true after the election, but right now I think it's premature to make that statement.